Good afternoon, everybody. Good morning for others in other parts of the world. We will now start with session 23 of this year's Asian Evaluation Week. And the topic of this session is supporting SMEs in a time of crisis, how to do it right. As a major crisis unfolding in the wake of the COVID-19 pandemic, many international financial institutions have deployed immersion packages involving intermediate lending, guarantees, and other forms of support to help small and medium-term enterprises to get through the crisis, and to get through the downturn. And in this session, we will learn about lessons drawn from past evaluations on crisis responses and discuss how these may apply to the current context. Gaps will also be identified, which may inform the design of future evaluations and, of course, of future packages. But before we start, I would like our session director, Sel Naik, to give us some tips on how to make use and how to make best use of the Zoom application. Sis, it's up to you. Okay, thanks, and hope you have learned well from this short video. Once again, I would like to extend a very warm welcome to all participants to this session of this edition of the Asian Evaluation Week. My name is Jan van der Kaai, and I am the Inspector General at the European Investment Bank, where I'm also responsible for the evaluation activities, the independent evaluation activities. I'm very happy to be able to moderate, and that I have the possibility to moderate this discussion today on how to get SMEs support right in the current circumstances. As the president of the EIB recently put, very adequately I think, SMEs are the lifeblood of the economy. If we do not help them to successfully get over this crisis, I fear that the pandemic will give a serious blow to a whole generation of entrepreneurs, with all the consequences this could have in terms of political stability, economic growth, employment, and innovation. And of course, I'm not only speaking about the EU and other so-called developed regions around the globe. As stated recently by the IFC, the need for risk capital is enormous in the fragile and frontier countries, where acute development needs persist. And these are often compounded by devastating effects of conflict. SMEs in these countries have the potential to drive much needed job creation and economic growth. But on the other hand, they have little access to the capital they need to thrive. They are typically too large to be served by microfinance institutions, and often too small and often too recently established to be served by a commercial bank. And they also face sometimes other challenges, such as a lack of management skills, management experience, or industrial knowledge. I'm convinced that we as an evaluation community can make our contribution to helping decision makers, including those of our international financial institutions, in designing the right products which would help SMEs survive the crisis and be better prepared to the ones to come, because unfortunately we have seen in history this happens more often. The aim of this session is to bring together lessons learned from evaluation of previous crisis responses and see how they could apply in the current context. And we will also try to flesh out some areas which could be subject of future evaluations in order to refine the analysis further and further and further. I would like to start off to introduce my colleague from the EIB's evaluation division, Jochen from Kameke, and Simone Signore from the economics department of the European Investment Fund, who will kick off our session with a lead presentation. Just a small introduction of the two speakers. Jochen joined the evaluation team only in March of this year, right at the start of the pandemic. Well, of course, there's no relationship between those two events. And he did it as an evaluation expert and team leader, and has been working for the EIB since 2000, holding various assignments in the bank's lending directorate. And in particular, he was very much involved in, during the last crisis of 2007-2008, in the reshaping of the bank's product portfolio to support SMEs. When he speaks about evaluation findings, he of course uses the findings of others. So he's not as a butcher checking his own meat. That's, I think, is important to mention. Simone is a senior research officer in the Research and Market Analysis Division in the European Investment Fund, which is the EIB's subsidiary focusing on SME finance. His current work focuses on impact assessments of public guarantees and private equity investments. And he holds Simone holds a master's degree in economics from the University of Bocconi in Milan, where he also took part in a research project focusing on innovation policy vis-à-vis SMEs. I've said enough, I think, at the moment. Please, I give the floor to Jochen and Simone.
Thank you very much, Jan Wilhelm, for this introduction. And good morning and good afternoon to everyone. Could we please have the presentation up? I can't see it at the moment on the screen. Yes, could we please go to the agenda slide? That's the next one. Please, this one. Yes, thank you very much. So in our presentation, we'll first of all underpin what Jan Willem just said about the importance of SMEs for the European economy and give the reason why we're actually looking at them and their support today. I will then present a few lessons learned from past EIB evaluations and how to get SME support right, and in particular, put them into the crisis context. And we will then hear from my colleague Simone about his research on how effective one or two of the EIF products have been in supporting SMEs through the economic crisis. And then we'll come to some conclusions, obviously. So next slide, please. Why do we actually look at the SMEs today, and why do they need our specific attention to get through the crisis? Well, as Jan Willem was saying, they're called the lifeblood or the backbone of the European economy. They form the vast majority of businesses in the European economy. They are a very important employer, and they produce the majority of the added value in the European Union. They're also very important for job creation, and this will be an important factor, let's hope, once we get through the crisis and the economy picks up again. So they're a crucial actor in the economy, but they're also very vulnerable. As one factor, one could mention that the cash holdings of European SMEs in the majority of cases do not cover more than 3 to 5 months of labor costs. And so if the cash dries out, as could happen in the case of the demand shock that we've seen in the crisis, that would very quickly lead SMEs to have liquidity problems. Furthermore, SMEs rely traditionally on bank financing for their funding. And this bears two risks in the context of crisis. One is that the banks are probably going to restrict their lending to SMEs in the context of the crisis to keep their balance sheets safe. And second, there is a risk of debt overhang, and there has been already before the crisis, and this might actually amplify when SMEs try to bridge the liquidity gaps they're facing with additional loans. If we move to the next slide, please, and you look at the right-hand graph, you actually see that this might have happened in many cases, as the loans to non-financial corporations have increased dramatically or significantly in the first months of this year. So many SMEs at best will find themselves constrained in their investment activity due to the high debt in their balance sheet. At worst, they might actually be at the brink of insolvency. Another aspect which makes SMEs a vulnerable side of the economy is that access to finance continues to be an issue across European countries. It is varying in intensities. In some countries, SMEs feel relatively better off. In others, and in many, the issue remains, and it's likely to worsen in the context of the crisis. So please move to the next slide. As the SMEs are a crucial but vulnerable factor for the European economy, the key question is indeed how to bring them through this crisis and keep their competitiveness so that they can jump on the opportunity once the economy restarts. And so we've looked back at previous EIB evaluations to try to identify a few lessons learned from there, how to do things right. And two main aspects are for an effective SME support in the crisis, speed and simplicity. So in terms of speed, to get the best or the funding to the largest possible group of SMEs concerned by the crisis and hit by the crisis, the evaluations recommend that one uses intermediated lending structures. That means the support banks would choose intermediary banks, the commercial banks who have a large branch network and can reach out easily down to the SMEs. SME business is still a local business, and therefore the house bank principle is also quite developed still, and choosing intermediaries with efficient distribution channels is therefore important. When choosing the right product to use for the support, it is important to not to start designing very complex structures or initiatives, but use products which are well established in the market and can help the SMEs quickly, therefore. Of course, if one chooses the intermediated approach, one should choose those intermediaries who commit to transfer benefits and the support to the SMEs in a timely manner and also in a transparent manner so that you can see where the support is going. The other aspect is simplicity. The evaluations recommend to use well-established SME definitions. Do not start using ad hoc definitions at the beginning of the crisis, which first need to be understood both by the intermediaries, the branch network, and the SMEs, but rather use well-established definitions. Another aspect is to simplify intermediary reporting requirements to help the speed of allocation. You could think of temporarily at least dropping reporting on some policy priorities such as energy efficiency measures in SMEs or the number of young employees they have in their company, just to focus on their key eligibility criteria, which you have in the SME definition. This will speed up the allocation work. On the other hand, EIB evaluations also warn of the consequences of the intermediated model and of dropping too many controls. Of course, you need to ensure that the support gets to those SMEs most in need, because if you target all of them, the support might get watered down and those most in need may not receive the adequate support to get through the crisis. The other aspect is also, if you let all controls down, the intermediaries might actually be tempted to use the liquidity support the EIB, for instance, provides to improve their own balance sheet ratios rather than to get the support down to the SMEs. So there is a trade-off to be made between speed on the one hand and simplicity, but also controls and ensuring the support gets where it should be. Therefore, EIB evaluations have recommended to prioritize impact over volume. That means to put the announcement effects of large volumes actually, they have warned to put the announcement effects of large volumes over the effectiveness of measures. Please move to the next slide. This also brings me to two other aspects, which I would call the antagonists of speed and simplicity. The EIB evaluations have shown that in terms of SME support, one size does not fit all. You have a very diverse context in which SMEs operate at national level. They are obviously active in a very broad range of sectors, and they have a very diverse range of financing needs across their life cycle. So for instance, looking at the picture I put there, a young SME might need equity support from a patient investor to get through the crisis, while a more established one might not want to put on the straitjacket of a co-investor, but rather just needs a funding line or a guarantee line to continue to stay in business. So we need to very carefully choose how to support SMEs locally and according to their needs. Finally, evaluations recommend to establish a clear hierarchy of smart policy objectives. That means, in few words, one has to define what the success should look like when defining support schemes. This will help the institution also to be accountable later on for what has been done, what has been achieved, and will obviously target the support to help target the support to those most in need. So these were a few points from previous evaluations. There may be others, and in particular, I think we as an evaluation community have a responsibility to continue monitoring what's happening and drawing lessons. The research for further effective measures is not ongoing only in the evaluation community, but also in research teams like the one Simone is working in from the European Investment Fund. And I'd like to turn to Simone to tell us now about his research and what he found out about the effectiveness of a few instruments of the EIF in the support of SMEs during the crisis.
Thank you, Jochen, and good afternoon, everyone. Thank you very much for the opportunity to present the European Investment Fund's efforts in the area of impact assessment and evaluation. The EIF is a leading provider of SME finance in the European Union and the largest public investor in the venture capital ecosystem in Europe. This is just to set the scene. If we could go to the next slide. So as you can see on this slide, the EIF offers a portfolio of financial products that tries to address general or sometimes specific market failures that typically negatively affect the access to finance of firms. And this as they evolve from being an early stage startup until they become an established SME or perhaps a mid-cap or larger corporate. Each of these boxes in this chart represents an example of policy initiatives that have been implemented by the EIF. They also represent a product, a financial product that is offered to specialized financial counterparts, financial intermediaries, FIs I'm going to use for the rest of the presentation, following an intermediated model. I would like today to focus on two of these instruments in particular when it comes to our research production, which are portfolio guarantees on the top right and venture capital investments. In the case of portfolio guarantees, the EIF issues guarantees for the benefit of banking intermediaries. For example, to partially cover the risk these intermediaries are taking when granting loans to SMEs. When an SME loan portfolio is guaranteed by the EIF, any loss from defaults in the portfolio is at least partially reimbursed by the EIF, typically up until a maximum amount is reached. In exchange for the guarantee, the intermediary commits to increase its risk exposure. For example, lending to more financially fragile SMEs or increasing maturities, loan amounts, lowering interest rates. In the case of venture capital, the EIF acquires stakes in early stage venture capital funds, acting as a limited partner in the fund structure. The EIF funds then, the EIF supported funds then invest into startups and thus share potential returns with the EIF and other limited partners. Now, the EIF selects investors' funds according to a specific market-oriented process, prioritizing policy objectives, for instance, supporting emerging investor teams and fostering geographical conversions and bringing up new hubs, venture capital hubs across Europe. If we could go to the next slide. Our first publication in the area of impact assessment and evaluation dates back to 2015 and actually focuses on the portfolio loan guarantees managed by the EIF since the early 2000s. By the way, all our research is published in the form of EIF working papers and can be freely downloaded from the website of the EIF. Now, our studies to date have looked at 360,000 guaranteed loans disbursed between 2002 and 2016 under two flagship European Union framework programs that were called MAP and SIP. The analyzed loans total euro 22 billion and span across 19 countries, representing 60% of all guaranteed loans that were issued under these framework programs. When we compare SMEs that received an EIF-backed loan guarantee with similar SMEs that did not, we find that the guarantee helped these companies grow in size. As you can see from the slide, there is a significant effect on employment, significant effect on sales, and significant effect on assets. But there is also variation across country that is quite remarkable. However, note that this variation is mostly explained by the characteristics of the beneficiary SMEs. Once we control for the characteristics of the SMEs, be it industry, company size, age, and such, typically this country, the variations wears off. In general, the smaller, younger, and more financially fragile the target SME is, the higher the effect of the loan guarantee, which kind of makes sense and introduces the concept that there might not just be one effect of the policy, but there can be multitude of effects depending on the characteristics of the beneficiaries. So in a nutshell, EIF guarantees consistently improved SMEs size and increased the survivorship rates, which are desirable policy features in the time of coronavirus. On the downside, the effect of profits was more ambiguous, and the effect on productivity was only visible in the longer run. A new generation of EIF products has tried to improve some of these shortcomings, and we will see in future years if they have been successful. Next slide, please. In the area of venture capital, we published 5 studies to date, which look at various aspects of EIF's impact on the European venture capital ecosystem. To keep things short, I will mainly focus on our last working paper, where we carried out a counterfactual analysis that is similar in spirit to the case of portfolio guarantees. But building a control group for venture capital-backed companies, however, is orders of magnitude more difficult than in the case of guarantees. Banks' lending strategy is a little bit more predictable than the one of investors in venture capital, who typically rely much more on the intangible features of the business they decide to invest in. I will not have time to discuss the how and the details, but the paper does so, so I invite you to read or ask questions later. When we compare the two groups, once again, we see that EIF venture capital investments provide a boost to the beneficiary startup size. For instance, here in the chart, looking at employment. The startup experiences overall faster growth in assets and sales and employment, becomes more capitalized than it would have otherwise been, and hires more and generates higher revenues. The magnitude of the effect is larger than in the case of guarantees, but it's unfair to compare the two products because, as I said in my introduction, they serve very different segments of the SME population. It's also worth mentioning that venture-backed startups grow more by sacrificing short-term profits. But we do not see obvious cost inefficiencies brought by the venture capital model. Rather, it seems that startups tend to prioritize scale over profits, and the venture capital money helps them reach that target faster than otherwise possible. Next slide, please. It's already time for conclusions. So how are these studies useful in times of crisis? For a start, having this type of large-scale evidence at hand that a given policy instrument was successful is a great motivator to adopt the same policy instrument in the future. This is, of course, assuming that such evidence exists. If it doesn't, I would argue that these studies are even more useful, as they can help improving future policy response through better design and or adjusting the objectives. The benefits, by the way, are not just a binary yes or no, we should not implement this policy. These studies can also be very helpful to try and quantify ex ante the effects of a future policy response. As I mentioned before, a key role in this context is played by the characteristics of the beneficiaries. In technical terms, the moderating factors of the impact of the policy. because they can actually affect the size and or the very presence sometimes of the economic impact. So again, there is no one economic impact, but of course, it will depend on the characteristics of the final recipients. One limitation of large-scale studies, such as the ones I presented, is that they tend to be rather general and sometimes a bit abstract. And usually because drawing large-scale conclusions for the specific aspect of product design and implementation is not possible. And that's why it's useful to complement such analysis with more practical advice, more practical lessons learned and insights from market participants. Now, as regards the first point, I want to just briefly mention some more operational aspects that made two EF flagship portfolio guarantee instruments particularly successful and appreciated in terms of deployment and market absorption. I will only focus on a few points, the ones that are underlined in the second bullet point here. One aspect that was particularly useful was the idea of the full delegation model. For instance, the EF guarantee agreement does not provide that the EF will check on every loan, but an eligibility framework will be established. And within this framework, the financial intermediary can originate and include loans in the guaranteed portfolio. And it doesn't, without needing ex-ante EF approval. Of course, this needs to be combined with proper due diligence, and the EF does due diligence to ensure that the financial intermediary is in line, credit policy is in line with the eligibility framework. Another aspect is the demand-driven approach. EF counterparts have to respond to the EF call for expression of interest, and that ensures to some extent that only FIs that intend to increase their lending and risk-taking will actually self-select into the scheme. But you know, it also bears the challenge of accurately predicting the market absorption, and that's why the third point, the scalability, is important, because a product design that ensures that the mandate and the particular instrument can be scaled up and fine-tuned were actually a crucial factor for the success of EF guarantees, given that they were rolled out over a long period of time during 2014 and 2020. As per the insights for market participants, since 2018, the EIF carries out surveys focusing on the various segments of the European private equity market that is in fact served by the EIF. And we ask directly to our partners or fund manager investors their view on our activity. We also survey the investors that are not partnering with us to get a better grasp of the evolution of the overall ecosystem. As you can see in the bullet point, the general perception of EF's added value, products and processes were highly positive in the European ecosystem. But actually, combing through the many responses, it is still possible to identify key areas for improvement in the future. And with this, I thank you for your attention, and I give back the line to Jochen.
Thank you very much, Simone. Actually, I won't monopolize the time more. I think I should hand back to Jan Willem and so that he can introduce the panelists of this session.
Well, thank you very much, Jochen and Simone, for this very interesting and efficient presentation. And I think that there are some relevant lessons learned coming from our lesson evaluation work of what works and what does not work for SME support. And we saw here, by the way, a very good example how we as evaluators can work very well together with other parts of our institutions, in this case, the Economic Research Department of the EIF. As was also said in this lead presentation, the examples and the study and the evaluation can focus on the EU. And I think it's now time to turn to other parts of the world and see whether the challenges are similar, or what other aspects should be taken into account when thinking of an ideal crisis response for SMEs. And I am particularly pleased to welcome participants from the global community of evaluation to this discussion today, and they're coming from around, really from around the world. And I would like to start to welcome, first of all, Ivory Young. She's the director of the Office of Evaluation and Oversight at the Inter-American Development Bank. So for her, it is very, very early in the morning. So Ivory, thanks very much. And I was very glad that your alarm has worked because you really made a big effort to be here in time. Thanks a lot for that. Ivory is actually a former colleague of mine, as she has been the head of operations evaluation at EIB for a very long time. She has worked as an evaluator in the EIB for more than 12 years, and most part of the time as the head of the evaluation office prior to joining the IDB. And I'm not going to mention the variety of contributions Ivory has made to the evaluation community, but because that are a lot. But I would like to thank you, Ivory, for bringing the wealth of your experience here to this discussion of today. Secondly, I would also like to welcome Roland Michelitsch. He is the Evaluator General at the African Development Bank Group, where he leads the independent development evaluation. Roland has experience, amongst others, from working for the Inter-American Development Bank and IFC, where he had different managerial functions. And I will mention one in particular. Roland led IFC's development outcome tracking system and helped integrate development results in IFC strategy, operations, and reporting. And thank you also to you, Roland, to contribute to this discussion. And last but not least, I'm very happy that Veronique Sales-Lozars has accepted our invitation to join the discussion. And Veronique is the Deputy Director General of the Independent Evaluation Department of the Asian Development Bank, one of our hosts. And she brings with her a broad experience working for both the public and the private sector on inclusive growth, private sector development, and policy reforms in both Africa and Asia. Within the Independent Evaluation Department of ADB, she is in particular responsible for the evaluation knowledge management activities, ensuring that evaluation knowledge is accessible, valued, and utilized, which is key, I think, when it comes to bring evaluation knowledge to decision makers and other stakeholders in crisis situations. Well, I think I've said, I've introduced to you the panelists, and I think it's now time to turn to a couple of questions I would like to pose to those to the three panelists, and after the couple of questions, I will turn to the audience to ask whether they have questions or comments or whatever there are. So let me start with the first round, and I see that we have heard about the reasons why SME support is of particular importance for the European economy. I'm now talking about this lead introduction. And to the panelists, are you in agreement with the thesis that SME support needs special attention in this crisis, also in your regions? And what are the key measures your institutions have actually put in place to respond to the present crisis? And I would like Ivory, whether you can start off with sharing your views on this issue. Please, Ivory.
Thank you, Jan-Willem. Thank you, Jan-Willem, for this question. Perhaps I should start comparing a little bit your statements with regards to the SME sector in Europe with what happens in our region. In Latin America and the Caribbean, in fact, if we look initially, the micro and small and medium-sized enterprises, we could think that the picture is relatively similar because they also account for about 99% of the firms, 67% of all jobs. It's basically the same numbers. However, when we look closer, it's quite different. And therefore, the role in society is also different. I will mention just three differences. First, productivity is much lower. If you look in the LAC region, productivity of large firms is about 6 times that of SMEs and 33 times that of micro enterprises. If you compare with OECD countries, those ratios are 1.3, not 6, and 2.4, not 33. So second, you have the capacity to export, which is linked with the previous. It's much more limited. In Latin America, only 10% of the SMEs will be exporting some of their production. In Europe, it will be about 40%. And third, and that's something that perhaps Roland will let us know whether it confirms whether in Africa is similar, but informality is much more prevalent. It has been a priority for many governments. It's been well studied during decades, but still it's a major issue in the region. A recent IMF study estimates that the share of the informal economy is about 40% of GDP. That's really huge. OECD countries is about 17%. So that being said, similarities, the universe is quite varied. We have had, during decades, enterprise creation that was driven by need, basically very small enterprises created for self-employment, or in the last decade, and that's what's important for us, and that's what we want to preserve in this period, is that we have been an increase of innovative firms driven by business opportunities and with a great potential to grow and capacity to export. So what is the Inter-American Development Bank doing during this crisis? The IDB group doesn't have, as you very often see in Europe, SME programs as such. Yet the support to SMEs comes from both the public sector arm, the private sector arm. The crisis response has been structured through 4 lines of actions: immediate public health response, support to vulnerable populations, safeguarding productive fabric and employment, and fiscal management. So on the 3rd pillar of this crisis response is where you will find most of the support to SMEs. For those 4 pillars, 4 prototypes have been created, and all operations are being deployed through those prototypes. That accelerates the design and the approval of operations. And that is consistent with lessons from past evaluations of past crises, in which you should not try to create new and design different operations for as a crisis response. So most of the support has been done through, for example, policy-based loans and support programs managed by the governments. The lending response has been combined with a knowledge response. A number of platforms, events, etc. have been created, as well as technical assistance. Technical assistance, I think, is a point that is important, and we may come back to this later on. Thank you.
Well, Ivory, thank you very much for this interesting view from Latin America, where what you said, where you see well, an overall similarity, but in that a lot of differences, which I think are very important to take into account. Let's go to Roland. Roland, please, your perspective from the African Development Bank.
Thank you very much, Jan Willem, and thanks a lot also to Jochen and Simone for a very interesting presentation. So as you said, we'll start first why in our region is SME support so important. Ivory already mentioned the dominance of SMEs in the economy, and so that's clearly one key factor there, where in Africa you actually have an even higher concentration still of micro enterprises also, so even smaller than the SME segment. The reason it's important is it's actually one, they do have problems accessing finance, much more so than larger enterprises. But also the second thing is SMEs are usually the ones who can create jobs. Now in a crisis situations, it's slightly different. What you want to do is at least try to keep them from losing jobs. And we'll, I'm sure, talk about that a little bit more later. What this requires is really figuring out which of the SMEs are ultimately then viable. Now, Ivory already mentioned informality is a huge issue, and it's as big an issue here in Africa as it is in Latin America. And that makes it even more difficult for intermediaries to figure out which of these enterprises will actually be viable in the medium and long term. I think I should also say a little bit more about the COVID situation itself here in Africa, because I think it's a little bit different than in many other regions, and here is why. So, number one, yes, we do have also significant numbers of COVID cases, over 1 million in Africa to date, and some little bit under 25,000 deaths. But the reason I think it is different is that every year in sub-Saharan in Africa overall, you have some 380,000 people dying of malaria. And there is evidence, which we, for example, put forward from our evaluations, is that there is a huge risk of actually increasing other problems, like, for example, an increase in malaria if you do not respond appropriately. So that leads me actually to AFDB's crisis response. We announced a big package of, first of all, a $3 billion social bond and a $10 billion crisis response facility. But the vast majority of that was actually going to policy-based operations, or PBOs, some $6.5 million. Now, within that, the primary focus is healthcare, but there is also social protection and supporting government programs, which in turn protect jobs and livelihood, and so more on the economy-wide scale support SMEs. Those were really our first priority. And we also have, as part of the crisis response facility, about $1.35 billion in terms of support to non-sovereign operations or private sector operations. But half of that goes to existing direct clients, so not really SMEs. But a good portion of it also goes to liquidity facilities, which in turn are expected to support SMEs and, for example, loan rescheduling and so on. I think I'll stop here and then come back in the next round. Thank you.
Well, thank you. Very, very interesting, Roland. Also, some similarities with the Latin American region. We will come back to that. But let me first give the floor to Veronique. Veronique, please.
Yeah, thank you very much, Jan William, and thank you for these very interesting presentations also with Jochen and Simone. I would think that actually the region of Asia and the Pacific is almost like an in-between those that were just described. It's at the same time very similar to what was described in the presentation and by Ivory and Roland, and very different. You know, in Asia we say sometimes same but different. That's actually the case in here. You know, as we all know, Asia has experienced unprecedented economic growth in the last decades that really shifted, literally shifted the global economy center of gravity to the region. And the region is now in middle income countries and counts a lot of upper middle income countries. So we can really say that Asia has been, you know, become the wealthiest, the faster actually than any other region in the world. So that's right. But at the same time, it's very similar to what was just described in the sense that there are a lot of disparities in growth between countries and also within countries with pockets of poverty remaining and creating also economic vulnerabilities. That's actually where SMEs come in the picture, because SMEs, very much to what was described, are the backbones of many economies, if not most. If you look at actually the similarities, I would say that from a research published by the ADB, the Asian Development Bank Institute, it says that 20 economies in Asia and the Pacific see that SME make up 96% of all enterprises, employing more than 60% of workers, contributing more than 40% of the GDP. So definitely the backbone, important contributors to the economy. I could even add that in lower income countries, this percentage of SMEs is actually greatly micro enterprises rather than SMEs. So in a country like Cambodia, for example, it's micro enterprises that actually dominate the economic picture. So it really, you have contrast within the region. What is similar to what I've heard is the type of constraints that we can see in SMEs. Definitely access to finance is still a constraint, again, because you have maybe microfinance for the micro enterprises, although they are not completely covered, and bigger access to finance for larger ones, but SMEs are always in between. Of course, other issues are lack of networks, lack of information, low level of technologies, constraining regulatory environments, especially because, and it was mentioned earlier, SMEs are very much dependent on their local business environment, not the national one only, but really what happens at the local level. So they do have this vulnerability. They are also less productive and have limited technology expertise. And that's something that Ivory mentioned for her region. And they are usually less resilient and less flexible. So all of this has been exacerbating during the by COVID-19 crisis. There is a flagship report from ADB called the Asian Development Outlook for 2020 that was updated recently. It says that COVID-19 may bring about the first economic contraction in developing Asia in nearly 6 decades. So first time in 60 years. And that's really scary when you know that actually Asia has been one of the drivers of growth, of global growth. And definitely SMEs are the ones that have been impacted because of the disruption of supply chains, disruption of production and consumption because of the quarantine, the regional trade sector that was actually growing lately has been also disrupted. It's more true in sectors like food manufacturing, transport, tourism, of course, and retail. Those sectors are the one where you have a lot of micro, small, medium enterprises. Most likely also women-led enterprises are going to be hardly hit. They are actually usually the most vulnerable. They are also the smallest. So it's also very important to pay special attention to women-led enterprises. So what has ADB's response been? More generally to COVID-19, as I heard before, ADB has been focusing on social protection, healthcare, disbursing almost 20 billion, supporting government programs, and a lot of policy-based loans. Specifically for SMEs, there have been responses and projects in both sovereign, what we call public sector, or non-sovereign of private sector side. It has been mainly through financial intermediaries, and that has been also to provide loans that can be on lend to MSMEs borrowers, and also to provide guarantees or direct loans to micro borrowers and SMEs. Sometimes also providing repayment holidays. And I think that's really important in times of crisis. And that's also lessons that we can get from former crises. And we have a few examples where actually in the past it has worked. I won't come to the lessons right now. I hope we can come back to it. So I will leave it to that now and come back to the key lessons we've learned from the past experience later on. So back to you, William.
Well, Veronique, don't worry, we will come to the lessons very quickly. Maybe just one question as a clarification to, in particular, I think Ivory and Roland. What I hear from this very interesting overview is that in Africa and Latin America, when we talk about the crisis response by the two institutions, IDB and the African Development Bank, there was, let's say, not so much, let's say, a direct focus in the programs in the new facilities on SMEs, but it was said it went particularly through policy-based loans. It is also the case with the Asian Development Bank, and there's a whole program very much focus on SMEs. Is that also the case for IDB and the African Development Bank, meaning that within this policy-based loans facility, let's call it that way, there are huge programs being focused on the SMEs, particularly in terms of protection of employment, etc. Maybe Ivory and Roland can give a very short explanation or some consideration on that. Ivory?
Yes, thank you, Jan-Willem. Indeed, there was no specific SME programs, but mostly as the SME support has been traditionally done at IDB, the support has been done through financial intermediaries, either public or private. Public through the bank, IDB, the bank, supporting development banks, national development banks in Latin America. Most of the countries have large national institutions and they channel, therefore, the support. That's the largest part. The other is the one done by IDB Invest, the private arm of the IDB group, which has channeled the support to private banks. So if that explains a little bit.
Very much, very much. Thank you. Roland.
Yeah, there was a very good question I saw in the questions and answer on how to best evaluate these policy-based operations. And I'd be the first one to admit that this is difficult. I mean, ultimately, where you need to start out with is, number one, is the money going where it's supposed to be going? And for that one, we actually work together with our operational colleagues to develop, I'd call it a logical framework. First is maintaining or increasing public expenditures for certain areas. So we talked already about health, but of course, this also relates to the SME segment. Is the money actually reaching these SMEs? Ultimately, as we will then evaluate the response, and this is only coming presumably next year or the year after, what we'll need to see is to what extent have the recipients of this funding actually survived and maintained their jobs. And so this is ultimately the test of whether the support for these policy-based operations would actually have worked. And so similarly, that's what I would expect when we get into the financial intermediaries. One of the key issues that we also put into that results framework is actually to what extent the recipients of the funding are actually viable, where one of the proxy indicators for that is looking at the, for example, non-performing loans of recipients versus a comparator group of enterprises that didn't receive funding, and how well did they perform, because obviously you don't want to pour good money after bad and putting that into enterprises that ultimately go bankrupt anyway.
Okay. Thank you, Roland. So with your remarks, we have moved, in fact, already into the work of evaluators. My second question to all of you relates to the work of evaluators, and maybe could you please share with us evidence which your respective evaluation work brought forward of what works and what does not work in terms of support to SMEs, and with a focus on the present crisis context. Are you in agreement, which was mentioned in the lead presentation, of what works and what not worked, or do you have other lessons which came to your attention when you were evaluating the past crisis responses? Please, Ivory, can you kick off with this question,
sure.
Please?
Sure.
Okay.
Yes, it's a very interesting question, because in spite of the differences of the SME sectors on the different regions, what I see and what we have seen over several years is that the conclusions of evaluations are quite similar, conclusions and recommendations. First, I would say, for example, what we had is over the several evaluations IDB has done in terms of SME support. And as I mentioned, and that is important, so allow me to recall that point. In our group, we have both the bank, the public sector, doing SME support, and we have also the private sector arm doing SME support. They both work through intermediaries, mostly. There is also not the intermediary, yes, in general, a little bit of direct support to SMEs, and intermediaries, as I said, mostly with banks, development or private, and a little bit with venture capital, certainly not as much as in Europe, that's for certain. There is still quite a lot of space to grow in that sense, to support that industry. So the conclusions, first, direct SME lending was really not ideal. Too little, limited in scale. The approach was not targeted, and clearly little effort to track development outcomes. So on top of high transaction costs, so clearly we recommended to stop direct SME lending. But also, for example, even working with financial intermediaries, what we found is that there was little coordination between the different windows of the group. So you have different parts of the group working with basically the same intermediaries, sometimes with different specific objectives, which was quite confusing to everyone and really did not support good development results. Another conclusion was that financial additionality was not demonstrated. And that, I think, is a common theme in several of the evaluations of other institutions as well. The institution was not collecting the information in terms of baselines. Beneficiaries reported that, yes, some of them were getting new access to finance, new sources of credit, but basically under the same conditions. The institution was not, for example, providing in general longer tenors, so that was not really demonstrated. And we ask that a better effort is done in that sense. And finally, a point that has been touched already is the question of how the funds are used. And basically the approach has been, as has been the case in other institutions, to report on the use of funds. We put X through a financial intermediary. We ask this financial intermediary to give us a list of SMEs supported up to that amount. That's not the idea. If you want to leverage, if you want to have impact, you need to look at how this financial intermediary is expanding their support to SMEs, how it is changing, if they have new standards, if they can reach new markets. So that was an important conclusion which led to an evaluation, to a recommendation as well. So those were the key lessons, I would say, and I think they still apply during the period of crisis. You need to work with the institutions. You should avoid direct support, no helicopter money, please. But also I would claim that we need to look at recommendations or lessons that go beyond SME support on a period of crisis. Not long ago, we organized a webinar and we're discussing with the Asian Development Bank as well, and we were discussing crisis response. And one of the key conclusions was that multilateral development agencies have often struggled to maintain the focus on crisis-related agenda when the crisis passes, and yet crises do come back. So that limits the ability to be ready for the next crisis in order to apply lessons. So what we highlighted was the importance of shifting from towards a preparedness approach. If in the past you look agencies how they shift from a emergency relief when there was natural disasters, famines, etc., to an approach of emergency preparedness, that's what we need, because crises will continue to come. So it's important to use this time to understand that the crisis is showing us the structural problems, so we need to work on those, and that we need to be prepared for the next one. Jochen mentioned, for example, don't create new definitions of SMEs during a crisis. That's just an example. So the main lesson is be prepared for the next one. Thank you.
I think that coming from also from my heart, I think that's very important. Be prepared. We don't want to see new crises occurring, but we know that they will come, and be prepared. Well, thank you for this lesson, Ivory. Roland, over to you, please.
Thank you very much, Jan Willem, and also Ivory. Number one, I should say I fully subscribe to everything that Ivory has said. Actually, having been 5 years at IDB, quite a few of these evaluations and the recommendations I actually led, so I completely subscribe to that. A couple of things that I would like to add to that is, one of them is, in addition to what we already heard, it's really important to also look at the overall environment for the private sector in general, and then for SMEs, and what is actually constraining the access to finance. And very often what is being used is a credit line as a tool, because that's very easy to do and gives you big investment volumes. But that's not necessarily what the biggest constraint is. So very often it might be, for example, you will see that now, particularly in the crisis situation, capital constraints on the part of the banks. So it's not the liquidity that they are lacking, but that they don't have a sufficient capital base to actually expand their lending. Or, for example, as we were talking about earlier, informality being a big issue. If banks can't properly assess creditworthiness of enterprises, SMEs or others, that makes it much more difficult to then do prudent lending. And so I saw already there was also a question on the informality. This is also something that on a policy level ought to be addressed much more to get a better handle on that. And who knows, maybe actually with the increased technology, and we have seen now during the crisis much more use of internet and so on, we'll have more electronic payment systems which provide a reasonably reliable view of the cash flows, so that it becomes easier for financial intermediaries to actually serve the needs of the SMEs. But on the other hand, it also becomes even more difficult during the crisis situation because you don't really know whether in the new normal or the new economy, this SME that may have been performing all right before will be the one to survive. And so really looking at these issues and working with the intermediaries becomes extremely important. Now, thinking back of the presentation we heard earlier, the importance of the definition of SMEs. I think we as MDBs are often at fault of trying to force our definition of SMEs onto financial intermediaries or onto countries, which may not be appropriate. So, for example, I've seen SME definitions that are really too large for the country. And the other thing is, in my experience, as Ivory already mentioned, you can only work through financial intermediaries. And unless you use the financial intermediaries definition, you cannot really focus on, are you actually increasing the relevant portfolio, for example, SME portfolio, or it might be female entrepreneurs or whatever it is. You will only be able to get good data on that if you actually use the FI's definition. And so we need to, I think, rethink our approach to say, okay, how can we work closely with the intermediary as a partner, check whether their definition fits with what we really want to achieve, and if yes, say, okay, this is what we are going to do. Ivory already mentioned also the importance of focusing on the relevant portfolio. I just want to elaborate a little bit what that means. For example, if an intermediary has a $30 million SME portfolio, you give them $10 million, in principle, they could actually run down their SME portfolio and still give you a list of $10 million worth of SME loans. And so you're not really increasing access to finance. And so what you need to instead focus on is, if we give you $10 million, how are you going to increase? Now, this becomes even more difficult in a crisis, because sometimes the goal might be just to maintain the current portfolio they have and not to contract. And we have heard earlier that this is one of the key risks. But in order to judge that appropriately as an evaluator, what you would really need is comparator information from other institutions. So which FIs are increasing their SMEs portfolios, which of them are shrinking. This again will require working closely with governments, many of whom are actually very interested in SMEs, but don't necessarily have appropriate data that would actually allow us to measure to what extent is access to finance for SMEs actually increasing. So
thank you.
I mentioned earlier the issue of wanting to, of course, reach those SMEs that are able to survive, and then the critical importance of checking the performance later on of the recipients. So are they actually viable, or have we essentially wasted money? Thank you.
Well, Roland, thank you very much. In fact, you're saying you're mentioning a couple of issues or problems with SME lending through intermediaries in general, but you say, in fact, well, in a crisis situation, these issues are even more pronounced. Veronique, please, can you give your ideas and perspective?
Yes, thank you very much. I think a lot has been said, and it resonates very well with actually the situation also in Asia, definitely. I would start by saying that actually I've worked a lot with SMEs in Africa and Asia. And when we do a survey, usually there is always a question about the key constraints, and what always comes first is access to finance. But with experience, I always came also to be a little bit cautious with this, because very often it's actually the interest rate is too high. You know, that actually comes up. But actually you need to go a little bit further, because otherwise we will continue to get stuck on that the key constraints is access to finance and that it's the interest rate. And I think that actually what Roland was saying is really true, that to go beyond that and see actually what are really the constraints faced by SMEs. And yes, access to finance, but very often it's actually more than that. It's access, it's maybe credit plus. It's actually also technical assistance or support and policy environments that are more supportive, including for the informal sector. Because we often have a tendency to think that the informal sector is outside of the spectrum of regulations and rules, but it's not true. Actually, they very often are even more impacted than the formal sector. But it can be also, yeah, access to technology, access to information about what is available. In times of crisis, for example, do we know who actually has access to the information that there might be loans available? That's really key. Very often we don't even take that into account. So it's always the same SMEs already in the system that get actually the benefits of the new credit lines. Capacity of the bank to assess the risk. Roland also mentioned it. I think that's also a very important element, and that's really also something that MDBs like us can really work on making sure that the intermediaries that we work with really not only try to reach out to the right beneficiaries, but have the capacity to do that and have the network to do it. A few key lessons that we have listed in a document that we published recently, which was a synthesis note that was published in June 2020 on lessons from previous crises and lessons to support micro, small and medium enterprises. We have series of lessons for both the sovereign side, the public side, and the non-sovereign side. And I will try to give those very quickly, and if there is need, we can come back to some of them. 4 key lessons on the public sector side, the sovereign side. Some maybe they seem obvious or no-brainer, but we can see that if they are not integrated, actually then the project are more likely to be unsuccessful. This first lesson is flexibility. It's actually being able in our project to be flexible when a crisis happens. And that means being able to switch from a program that was providing long-term loans to actually offering maybe more short-term or working capital sub-loans, being able to readapt to the demand. I think that's really something that we need to include in the project that we support. Second key lesson is having very targeted approaches to really address of the most vulnerable. And that means understanding the demand. And we often talk about SMEs in general when we all know that there is a variety, it's not a homogeneous group. There is a huge variety of SMEs. And we talked about the different stages that they can be in the presentation, but it can be also depending on the sector, their integration value chains. It can be also because of the gender or community from which the leaders are coming. It can be many elements that actually differentiate the different SMEs, and their needs are very, very different from one another. So it's very important to know what the target is and adapt the tools to the target and being able then to follow up. And that's actually the third lesson, the importance of data. It was mentioned before, and I will really insist on that, especially from the perspective of evaluators, being able to make sure that it's the targeted SMEs that are receiving the money and building the capacity of the intermediary, the financial intermediaries to collect the right information and to follow the money and make sure that it's actually reaching the right people at the right time. So that's the importance of data, and good database is really important. For the definition of SMEs, I would say that actually sometimes you do need to have a definition that's adapted to the context and country. And it's very difficult to have the same definition across, for example, across Asia. You won't use the same definition of SMEs in Cambodia that you would use in India or in Kazakhstan. So I think it's actually important to have a constant definition, but one that is really adapted to the country. And that's really important. Fourth lesson for the public sector is to have, together with money, to have supportive policies for improved business environments. And very often, we need to make sure that there are some accompanying intervention that support the access to finance in the long term. So policies that also, and regulatory measures that will contribute to sustained and optimal SME development. And I would insist on the fact that that should not be just looked at the national level, but that the subnational level should be really taken into consideration, because here again, actually you may have completely different business environments from one province to another. So those were the 4 key lessons for the sovereign side. I have 5 lessons from the private sector support. I'll try to make them even faster. So the first, for private sector, the first lesson is that credit in local currency in times of crisis might be really important, because of course what we want to do is to reduce the foreign currency exposure of financial intermediaries and microfinance institutions. So as MDBs, we need to be able actually to provide that. Second lesson is clear design and monitoring framework. it's kind of the other side of the code of the lesson for sovereign about the importance of data. It's true for also for private sector project. So making sure that you have sound evaluation tools, indicators for both accountability and learning, and for making sure that there is the possibility to monitor where the money is going and whether it's really addressing the real needs and demand of the SMEs. Third key lesson is that it is important to also provide trade facilitation support. And that's, I think, a lesson that's particularly true for this COVID-19 crisis, because what actually was really disrupted was the trade facilitation, within countries and outside in the region. So providing short-term trade facilitation support to SMEs is really important to prevent or to mitigate damage caused by interruption of the trade flows. We have key examples of that in the past in the Pacific, for example. The fourth lesson is the planning is important. And we found also that phased disbursement were actually quite useful and were a good way also to make sure that financial intermediaries were continuing to be on the right track, and that actually they were closely monitored so that the credit worthiness of these financial intermediaries were adapted to the need in the long term. So phased approach. And the last lesson for the private sector is that credit guarantees for financial intermediaries are really important. And of course, access to credit is important, but very often it's actually the risk that the bank or the financial intermediary is not ready to take. And that's where there is additionality in our work, is by also providing these credit guarantees. And that also require quite strong design at or what we call quality at entry, and building also the capacity of the partners, the financial intermediaries as we go. So those are the key lessons that we found from other crises, financial crisis or tsunami and other crises, not of course like the COVID-19 crisis, but they still are useful lessons that can be used for the COVID-19 situation. So I will stop here for now. Thank you.
Thank you very much, Veronique. Yeah, I think it is now a 12:15. I think we heard a lot of insights from our distinguished panelists. Information about how the different regions has reacted to the crisis, the different packages, the lessons learned, both from crisis situations and from non-crisis situations, but then on programs and tools which can be used very well in crisis situations. I think it's now time first to go to our audience, and I invite all of them to ask questions through the question and answer box. In the meantime, I already have received a couple of questions, and I just start with a very interesting one, and it was posed to Roland, and I will ask the panelists to answer the question, but do it in a very brief way in order to have as many questions to be answered as possible. The question is as follows, Roland. If the big proportion of funding is going to policy-related issues, it is said that a big proportion of funding is going to policy-related issues. And then the question is, how will you measure the effect of these policies on the SMEs, who most of them in Africa are very young? 2, how will you track the funding to be sure it's used to what it is supposed to? So it's about accountability, transparency, misappropriation of funds, especially during a crisis, in this case, a COVID period. So how will you measure the effects of those policy-related issues? And second is, how do you track that the funds are used for the objectives they were aiming at? Roland.
Thank you. Thank you very much, Jan Willem. I already started a little bit earlier to respond to that question, but I want to elaborate a little bit more. So first of all, policy-based operations are among the most difficult to evaluate overall. what you want to do is be very clear upfront in terms of what are actually the policy objectives you want to pursue. Then the other thing is about PBOs, as they are called, is money is of course fungible. And so what you want to do is have indicators that are overall, for example, for budget expenditures. So how much money overall should be spent on, for example, social protection, for, in this case, supporting SMEs and so on. And so this is what you need to agree on upfront, what is actually the key indicator that's going to be so at least, for example, X% of GDP, or at least that much money is being spent. Then there was the question about governance. So, for example, what we have put in place in cases where there were concerns about governance is requirements to have a special audit of the expenditures. So this, at this point, only still goes to, is the money being used for the intended purposes? But of course, as evaluators, that's still not good enough. We want to then look beyond that and have they actually then reached the development goals that we wanted to have. And so what you would want to have for that is for the recipient SMEs, for example, to have a proper baseline. So what did they actually, what was their situation in terms of, say, sales, employment, and so on? And to what extent have they at least maintained their sales and so on? Now, that still, for an evaluator, is probably not sufficient information. Ideally, you would want to have information then also for the economy to say to what extent can you say something about the effect of the recipients of the funding as opposed to other enterprises. And this is something that we'll have to tackle in our evaluation of the crisis response. And I already know it's going to be very, very difficult because, and this is one big difference to Europe, where we saw this very nice comparison with a comparator group of enterprises. Very often the statistical systems in Africa might not be as good to allow us these comparisons. And so we will just have to see and maybe use some proxies. One of them I already mentioned. I mean, how many enterprises are still in business? Did they at least maintain their jobs and their sales and so on? But I'm not sure how far we'll ultimately get to have a comparator group also.
Okay. Thank you, Roland. Let's move to another question. It's about the COVID-19 pandemic, which has significantly affected informal sector enterprises, perhaps more than their counterparts in the formal sector. That's the statement by the one who asked the question. Yet, it is said informal sector enterprises may miss out on credit or financial support from COVID-19 stimulus packages, as they are likely not integrated in formal government mechanisms. How can NDBs target informal sector enterprises, considering their impacts on job creations for the poor? I think that Ivory was the one who mentioned the importance of the informal sector. So, Ivory, do you have a view on that? How NDBs can target this informal sector better, in particular in a crisis situation?
Sure. Yes, clearly informal sector has been strongly affected by the crisis, and the impact that it has on society is huge because so many people depend on it, and with very low levels of income very often. Now, while it is true that therefore they have, in most cases, I wouldn't say it's universal, but in most cases they would miss schemes in which you have credit support. In many cases, those same actors will be catched by the social programs. In most countries, you would have had that also in parallel, you have had subsidies for the poor, and those actors would be cut on that type of programs later. Now, I think that this situation needs to be taken as an opportunity as well, because this can be an incentive for many of the small companies to enter into the formal economy. Of course, this needs to be accompanied by a number of complementary measures to simplify the regulation, to make it accessible for companies, but they can see also the advantages of being on the formal sector.
Thank you,
Thank you.
Ivory. Veronique, do you have a view on this issue? How
yes,
to better
thank you.
Yes.
Certainly, the informal sector is definitely one of the most difficult one to reach out to. And as Ivory was saying, very often they are actually, it's mainly social project or program that are actually tackling their needs. But I think still we shouldn't be just satisfied with that. And I think there is indeed an opportunity to work more with some microfinance institutions or intermediaries, but the one that have a real network at the local level in rural areas, the one that I actually also look at the activities without, sometimes actually taking into account just the fact that it is formally registered. There are actually ways of reaching out, but of course it should be accompanied by measures to help these enterprises, or very often they are self-entrepreneurs, to become more formal. And actually I've seen in many countries the fact that actually it's not just formal or informal. There is a lot of in the gray area of informal, formal sector, of informally formal sector, because a lot of enterprises and self-enterprises are not fully formal if you look at the national policy, but they are registered at the local level. They do pay some taxes, and very often actually at the local level they are known. So really reaching out to the local level, going and working through the subnational levels actually could be a good way to reach out to this informal sector. It's actually very difficult, of course, to do, but I think it's possible if really you look at the right institution to work with, and if you look at it from the very rural grassroots level. That's actually one of the way. I think rural banks and microfinance institutions can be really good allies in trying to reach out to them.
Thank you, Veronique. I think now, because we are coming to the end of our session, so I would like to give the floor to Roland, as last panelist, to react on this question on the informal sector, how it can be better reached. Please, Roland.
Just very briefly on that, this is actually drawing on my IFC experience, where some incentive structures to get enterprises to formalize actually work. Now, if you put that into the crisis context, governments could, for example, try to say you can get support from the SME support program, but in return, we expect you to formalize. Just have to be careful that the business environment overall is not so onerous that might actually kill the enterprise. And so this might be one area, particularly in this crisis situation, where we could actually work.
And I would add that actually sometimes also enterprises know that they may not have a good incentive to formalize, because it may also mean a lot of informal fees for them. We have to be conscious of that too.
That's right. That's right. Well, what I said, we are. It's now Manila time 12:30, so we are at the end of our session. First of all, I would like to thank everybody, the panelists, Ivory, Veronique, Roland, the presenters from the IB, Jochen and Simone. And of course, last but not least, the audience for their questions and their commitment, and of course the organizers. But before coming to enter the session, let me say a few words, trying to say a few things about what we heard today at the last 1.5 hours. Because it's of course not possible to repeat everything. I think it would also not be very effective, but let me say a few words. I think that the importance of the SME sector is beyond doubt. There was no question about that. So given that point, that the SME sector is so important, also in crisis situations, to keep it going. The panelists shared some very valuable lessons with us, coming from their evaluation and from their insights. And a few of them are the following, I think. That first of them, you could say that crisis responses tends to be more effective when it builds on existing programs or instruments, and also keep it simple. And we should consider shifting to an emergency preparedness approach, because crises are bound to occur, unfortunately, again. Be prepared. Third, evidence shows that effective support has to take into account the very diverse financing needs of SMEs and a very different situation in which SMEs operate. I think it was Veronique was saying the same, but different. There's no one single answer to the question how to do it right. It's important to understand what the key constraints are, and you have to act according to that. It may not solely be financial constraints, but there might be broader elements linked to the business climate or capacity of the intermediaries. So we have to look into it very carefully. Technical assistance was mentioned, etc. And it is important to make clear from the start how success should be defined and set up a solid monitoring and evaluation framework that reflects our objectives. In that way, we can at least try to avoid that money is wasted in the wrong way. Well, the money is wasted and being used in the wrong way. I think so. Monitoring and impact measurement is very, very important. There are, of course, many other measures. I won't repeat them, but I would like to stop here and thanks again all of you for your interaction and for your contribution to this discussion. Thank you very much, and I hope stay healthy, and I hope that we see each other soon again. Thank you.
Thank you very much, Jan-Willem. Thank you, colleagues and audience.
Thank you very much to everyone. It was a pleasure.
Thank you very much.